Hi, Jim Gore from Thor Wealth Management. Well, the buzzword that everyone is hearing about is inflation, especially here in the United States. But there's one country that is not experiencing a lot of inflation. As a matter of fact, it's come down over the last 2 years. So if you look at this chart, you can see that the United States inflation rate has gone up close to 8%, where in China, it's gone down from 5% to 0.9% annual inflation rate right now. Now we have to remember, China wants to be one of the reserve currencies in the world. They want to take that reserve currency away from the United States. And they can do that very easily by some of their monetary policies. And let me explain that in this chart. If you look at this, this is the year-over-year growth rate, change in the growth rate of M2. And you can see here that during COVID, in the United States, M2 exploded. The growth rate went 4 times what it was. And even now, we're doing 115% more of the growth rate a year ago than we were doing today. So the growth rate in our money supply has been explosive, but look at what China did. China increased their money supply a little bit, but they didn't increase it like we did in the United States. So right now we're at a currency war with China, and it seems like China is trying to make sure that their currency is going to be a reserve currency in the future. And by doing, keeping their money supply growth low, there's a very good chance that they will do it. So Federal Reserve has some work to do. And in our opinion, a quarter point rise here and there is not going to do it. And what we have to do is look at what happened in the past. Now, if you look at this chart here, this is looking at 10-year Treasury's real rate of return. What this is the rate of return of the Treasury minus the inflation rate. So right now, obviously, you're getting a negative real return on Treasuries with this high inflation. 2 other times that we saw this phenomenon. We saw it back in 1975, and we saw it back in 1979, 1980. So the Federal Reserve, we had real rates that were very low, and in order to fight inflation at that time, the Federal Reserve had to make some dramatic moves in the federal funds rate. So let's look at what they did. So this is looking at the history of federal funds rate, and you can see back in 1975, in order to get us out of inflation, the federal funds rate went up to 13.5%. In 1980, 81, they had to raise it up to 21% to fight inflation. So when the Federal Reserve said, hey, we're not worried about inflation because we know how to fight it, yes, they do. But the damage can be quite dramatic. So you see a little blip at the very end of the chart. We're at 0.33 right now. That's a very small move. There's going to be some major moves that the Federal Reserve is going to have to do, and they must do, in order to tamp down inflation and keep the US dollar as a reserve currency. Saudi Arabia is talking to China about selling oil in yuan instead of dollars. That is a direct competition for the US dollar, and the Federal Reserve, it's more important for them to get this right and make sure the dollar is a reserve currency than anything. That's their number one job in our opinion. If you have any questions or concerns, as always, reach out to us on our website or give us a call directly, and we'll talk to you in a couple weeks. Take care.